Welcome back, everybody. We are going to be doing a short video now on the next tab on our spreadsheet, actually the next two tabs on our spreadsheet. We're going to be talking about non-bargaining employee costs and then just some more general costs. So Hank, take it away.
Thank you, Lori. Okay, we've covered trade labor costs, we've covered vehicle costs. Let's talk about people that are not bargaining employees, which you may not have initially, you might have. You still got to go through the same process to find out what are they going to cost you. In this particular example, again, this is just an example. You can use the spreadsheet, the formula works, but you need to do your own thing. You need to get with your accountant and figure this out. So I base this on a base wage of 30 bucks an hour. So I've got somebody working for me and they're making 30 bucks an hour. I need to add in Social Security. I need to add in Medicare. I need to add in state and federal unemployment tax. The numbers I used, you can see right there. Are they the right numbers for your business in your state? I can't answer that question, but if you plug the right ones in, it'll tell you that. And so that gets us from 30 bucks an hour. Now we've got this $11.22. So let's see where I'm getting that from. And we look at expenses. Now keep this in mind that I'm trying to come up with a labor rate for this one employee. If you have 10 employees, your costs go up, but so does the distribution of this go up. So here's everything that I've got figured in here. And if you just take that away from this particular section that we're doing, understand everything that has to be figured. Professional fees, that could be an accountant, health insurance, expensive, computer hardware, computer software. All of these things have to be accounted for. It's not like they're free. It doesn't come out of the ground. It's not like they're like plants where, oh, well, I've got all this stuff. And again, it's easier to account for things if you can figure what this cost is. So computer software, printers, printer ink, phone hardware, phone service, IT support, internet service, all of these devices that we use now at a readily usable business pace, like computers and softwares and phones and all of that stuff. It's all great, but it's all expensive and it doesn't last forever. You buy a pipe wrench, it costs you X amount of dollars for that pipe wrench. 5 years later, you might still have that same pipe wrench and it might be working pretty good still. You might buy a drill. Now, maybe depending on how much you're using the drill, it's a cordless drill. I spent X amount of dollars for the drill. And again, I might have that drill for a number of years. But I can tell you when it comes to software and hardware and computers and phones, rule of thumb is 3 years. Now, could it last longer than that? Sure, it could. It can also get to the point where it's dead after 1 year, or it won't support the software that you thought you were using. And so now all of a sudden you've got a computer that works okay, but it won't support the software you're trying to use. So all of this needs to be accounted for in some form or another. Most places, most accountants would look at laptops and computers and printers. Every 3 years, I'm going to replace it. That's just kind of a rule of thumb. Phones, every 2 years, I'm going to replace it. Monthly service of your mobile phone service. IT support, it's going to cost you some money to do that. Pens and papers and markers and envelopes. And how about PTO days, which is paid time off. So that's vacation days, sick days, paid holidays. And keep this in mind, in many bargaining situations, the number of paid holidays is different than what the non-bargaining people get. If you look at the amount of federal holidays today, it's actually more than what's in a CBA sometimes. So you got to kind of figure this into this. So let's just look at this real quick. So I said, I got professional fees of $3,000. I start looking at all of these things. A laptop is going to cost me $3,000 plus miscellaneous stuff. Now I know what you're thinking. Well, I went to Best Buy and they said for 800 bucks I can buy a laptop. Yeah, you can. But guess what? That laptop you're buying for 800 bucks, one, may not include all the peripheral devices you need. Two, it may not be able to run the software you need to run to operate your business. So I'm using $3,000. That's just from experience. You're going to spend more than $800 on a laptop. And when you add in monitors and miscellaneous devices and docking stations and mouse and et cetera, et cetera, et cetera, it can add up quickly. Plug in what you think is the right number for your business and so forth. Do not think if I've got a laptop at home, it's 3 years old, it works fine, I'm going to start my business and I'll use that laptop. Well, good luck, because what could happen, one, that laptop may not be able to support any estimating tools you need, any accounting tools you need. Yeah, it's fine for searching the internet, but it may not support all of the business process software you need to run a business. And here's the other part. You do not want to skimp on this, because nowadays everything runs through the computer. Your computer crashes because you've overloaded it, or it's a crappy computer. Oh boy, you got problems, because now you've lost your ability to do anything at your business for a day, 2 days, 5 days. Can get expensive very, very quickly. I take all of this stuff and I roll it together, and look at this. Yearly expenses, $20,000 in expenses when I add all of this together. Divide it by, in this case, I used 1,800 hours. If you remember from our previous session, we talked about 1824, real number. Comes out to $11.22 an hour. Oh, there it is, $11.22. I add that to my 30, I add that to all my taxes, and that employee that I'm paying 30 bucks an hour, it's really costing me 45 bucks an hour. And so that's important to understand that, this case, it went up 50%. If you're paying somebody more, let's say you're paying somebody 50 bucks an hour, or let's say you're paying somebody $85,000 a year or $100,000 a year, the percentage that will go up will not be as dramatic, but it's still going to go up. It's not unusual to look at it and say, whatever my raw cost is to hire an employee, I better add between 30 and 50% to that number to get to really what it's going to cost me for that employee. So in this case here, we're up to 45 bucks an hour. Why is that important? Again, you're trying to build a roadmap. How much do I have in cost? So before you go, start a business and I'll hire all these people, I'll hire my kids, blah, blah, blah. Guess what? Be aware it's not cheap. And you better have people that are productive. When you start to pay people 45 bucks an hour or 60 bucks an hour or 80 bucks an hour, you're going to be real conscious of whether or not they're productive from that standpoint. Important to understand as you look at your costs. So that's a non-bargaining employee. Let's look at some other costs that you need to account for. Let's call them overhead costs. Lori brought this up earlier, so let's talk a little bit about it. On this chart here, let's look at overhead costs, fixed overhead costs, advertising, building rent. Again, doesn't matter if you're doing $10,000 worth of business or $1 million in business, your rent price doesn't change unless you get so busy and add so many people, you've got to add more square footage. But let's just go off of that. Computers. Well, I bought 3 computers. Well, it doesn't matter how many people are there. That's a cost. Fuel, that's a variable cost. Insurance, you start to buy insurance, and we'll talk about insurance on a later learning module. Internet, there's a fee. So if you're buying internet from an internet provider, you're going to say, well, I've got 5 people in my office, or I'm anticipating 5 people. They're going to charge you for the certain speed that you need on that internet. And it doesn't matter whether you slow down and guess what, you let 2 of those people go, you're still paying this number. It doesn't change. IT support, that can vary sometimes based on number of workstations. But again, you might think, oh, my son is really good or my daughter's really good, and I'll have them do the IT support. Bad idea, because you may run into situations where you need people that you need it done right now. You can't wait. And the more involved your business is, the more software like service you've got and tool tracking you've got, the more support you're going to need to do that. Marketing, permits, phones, print, these are all overhead costs. Safety, process and equipment, software subscriptions, tools. You're going to need a certain amount of tools, and that can vary, but some tools can get very expensive. Utilities, oil, gas, electricity, vehicles, website. Are you going to have a website? That's cost you money. It's not free. It may appear to be free, but it's not. There's a cost there with that. There's a cost to develop the website, and then there's a cost to maintain the website. So tasks that need to be accounted for as either job cost or overhead cost. I will tell you that a lot of people that run projects in a mechanical world, this gets ignored. It just gets ignored. They don't pay any attention to this, but it's got to get done. If you're working for a general contractor and that general contractor requires an American Institute of Architects billing, somebody's got to set that up. And it's not like a 2-minute task. The bigger the job, the more complicated this gets. Well, there's a cost in that. Somebody's got to do it. Whether that's you as the building, the contractor owner, or whether that's a project manager, or whether that's a foreman, somebody's got to do that. Here's a big one: collections. If you think you just send a bill out and somebody just sends you money, I wish it was that easy, because it's not. This is a challenge. And we'll talk about this when we go back to the PowerPoint and we look at cash flow. But collections is a big deal. And the list goes on. I put this together because these are the things that people forget about. They just think, oh, this is nothing. Well, if you take a project and that involves all of this and start putting 5 minutes for this, 10 minutes for this, 15 minutes for this, 20 minutes for this, this adds up to a big number very quickly. This is not like, oh, this is only 10 minutes a week. This could be 4 hours a week of doing all of this. Job site meetings. Who's going to the job site meeting? Are you going to the meeting, or are you sending somebody to the meeting? Well, guess what? You got to pay them for doing that. So whether it's a tradesman that's doing this, or whether it's a administrative person doing this, somebody is doing it, and you need to be aware that it has to be accounted for in some format or another, whether that's built into your burden rate. Remember, we talked about that unaccounted for burden rate, or whether it's built into your hourly rate. Somebody's got to be doing this. The biggest challenge I always had with project managers is they think of project management time as, I go to a job meeting, okay, I get that, it's project management time. I do a billing, that might be project. All this stuff gets kind of forgotten about. They just think, oh, what do you mean? It only took me 5 minutes to order material. Well, that's ridiculous. I know it takes longer than 5 minutes. Subcontracting, doing submittals. You want to try to take all of this stuff here that you can and get it with a lower cost labor. If you're going to use your trades guys to do this, keep in mind, they're costing you $105 an hour. So do you really want to use somebody at $105 an hour to do billing, or to do equipment ordering, or expediting material, which could be no more than calling somebody up and yelling at them as to where the piece of equipment was that you ordered? So think about that. Think about how you want to do this. Just don't forget about these items, okay? And that's going to kind of wrap up our course. Now we're going to go into another section of the learning module, and we're going to look at the pro forma spreadsheets now. And we're going to start with business expenses and then business revenue.
We'll see you in the next module. All right.